remember this from a different day. It's like we have a falling wedge on top of the rising wedge, eh? But the falling wedge actually looks like it wants to work. You know, last time we saw this, let me take you back to another point over here. Like, what the heck is this? Do we see this happening? Like, what is that? It was 9:58, 10 o'clock that we did that. We came back to the test of the tip. Let me just like take a picture. Take us over to the current time. Post a picture. Bam. What's that? I don't think it's gonna, like I said, I think it's gonna work. It is working, ironically, not doing what it did here, but I can see it's set up the same way. So I'm like, okay, interesting. You know, it even had that little spike out of the top there, and I can see that too, but it's giving people the wrong idea. And you know where this all started? This pattern started from there. You see that color? You see that range? Like we've already done this in this area. Like hold on a second. Like if I overlap the pictures with the price, it is almost trying to do the same thing, which is so funny to me. Obviously the falling wedge did work and it brought us back to the tip of the triangle. So like, check it out, that it's kind of trying to convince people that it's going to do the thing it did last time. And I just like, I wasn't seeing it. I don't think that it was, I thought it was a trap. You know what I do like? These fibs. All the way over here. Oh. Like let's get these things, these ones in action. Like what about the 261? No, the 227. But still, 188's in a red zone that could mean coming back down to this high and using it. Like we could take the range that we have right now, like this area where the bulk of our volume is contained within that zone right there, and put it in here. Ah, so here we are, moving up to the 188-200. Wonderful. Get a B point in here as well, so we have to understand that at any given time we could return back to both of these levels. It's not because I'm actively interested in them, but they should be allowed. Like they mean that any stops dragged above the red zone are going to get annihilated. Also, any stops that are dragged above any of these new highs are going to get annihilated. And I don't care from when. It could be from when we get to our target, for crying out loud. Like the 261 is all the way up here. You know, the 188 to the next big pattern is all the way up at the red zone. And this was all part of yesterday's plan, to triple everything everyone got excited about in the morning. And what's ironic is these levels, even though they're hit now, I don't consider them hit. So if you made money on them, that's great. You'll be able to do it again later. I'm not going to take them off. They're still untested B points as far as I'm concerned. But if you got a test out of them, then that's good on you. I mean, at the end of the day, it's not much, but it is something. I think that what we're going to see later is bigger versions of that. You know, where we come back and test from larger, longer distances away. But yeah. We have 3 drives here, in many different forms. Like, think about this. 1, 2, 3. But also 1, 2, 3. Like, I didn't draw that really well, but it's basically trying to make the third high, as it did here. So it means that, you know, we're not making a clean run right now. Like, this could be viewed as what I call the choppy. Like, in, you know, it is the choppy part of the paddle pattern. You know, the fast and then the choppy. That's what I talk about. Basically, we've done this fast and then choppy on the short term. We've also done the same thing over here. That all the people that have bought in this area are certainly late, right? Like they're buying on top of the red zone and stuff. So in the future, if we want to deal with them, it should be allowed. Now, what's funny is that makes hedging that much more attractive because yes, we broke this line, right? And it's insignificant now. It's a broken line. It's never going to break like an unbroken line again, you know, because it's never going to be an unbroken line again. That's logic. The red zone is related to the green zone, and at any given time, if we want to return back to the POC, it'll look like the it'll look like the green zone. So, and when they make that trend break, it's likely going to be sharp and fast and try to get people in on it. Like that's what it's going to be doing. It's trying to convince them that the sharp and fast move is like, you know, it makes them shock. You know, it makes them like, oh, you know, like they get like excited about it, really. And like they've never seen it before or something, you know. And when they watch their profit and loss move on a move like that, you know, it makes them feel uncomfortable. They buy a ticket to the emotional roller coaster, as I call it. The 188 to this level right here has been used, but after all, I do think that we will see the red zone. Anybody that wanted it to break the trend from there, like they're still down. And they think that the Bears are winning now? I'm like, I'm sorry, but they're not. They're not winning. This is allowed to happen because most people can't benefit from it that are short unless they shorted from up here. And that means they would have had to be disciplined to not be aggressive here or here or here or here. I'm like, the people that are gung-ho on thinking today's supposed to be bearish, they're down and they're long gone. So I'm like, these people? I don't know. I don't think they're something to be worried about too much. I think we can make an inverse head and shoulders to get back to the point that we started here. Like this point right here, like that's an interesting point to me. You know, I wouldn't mind returning back to it. Do I care from where? Somewhere from here to the red zone, we reverse back to that point. And I'm like, do I have to think about it more than that? Well, I can. I honestly don't want to, but I can. It's not something that I think is going to provide incredible value, though. Like, buying this late into the trend is a very high risk, and I don't want to entice anybody to try and do it, because it's a dangerous thing. At the end of the day, I do believe that the yellow line that we have on there will break and likely take back most of this dump immediately. So I'm like, okay. Is this the sharp, fast dump that convinces people to get out of their long trades? Also, remember, this is the fast, and this was the choppy, no? We take back the choppy? This was the fast, this was the choppy, we take back the choppy? Or what? You know, did we do it again? Or what? It seems like we did. So I'm just putting it out there. Is it out of order then? Well, it did come off of a 188, did come off of a red zone, it did do the dip from the point that it should, and it is at the B point to the 188. So this 188 right here is directly associated with this point right here. And that got to it. It's done. So that's cool. Good to know. Take them off. At the end of the day, what we can do now is put fibs in from the bottom to the top. And notice how we're not even halfway, or we're about halfway. Yeah, halfway. But if you were part of that move, what made you give up the whole thing? And are you waiting to get stopped out still? Because I'll tell you one thing. This line is kryptonite. When it breaks, you're in trouble. And it doesn't have to break from here. Like everybody that wants it to break will get stopped out most likely, then it breaks. Because that would be like a 4th and 5th wave. Doesn't it look like a 5-wave move? Isn't that ironic that we've been making 5-wave moves all day long and here we are with a potential 4th? And, you know, people that are eager will be buying into it and they'll be stopped out and they'll feel the break of the trend. It's typical. And I'm like, well, the people that are patient enough for the 61, they're probably going to get beaten up too by the red zone. We come back from the red zone to the 61 from the underside, that wouldn't surprise me. This is the way of today. And we see it some other days, but, you know, remember, today has a red zone and we're on top of it. This happens in other areas. You may be conditioned to think you might get the same results. The red zone was a force to be reckoned with. We actually came down to the red zone. If it's the cause of the break of the trend, then it'll show its significance. Something that should happen. It's a healthy move. At the end of the day, it might not seem so healthy because it makes you wait and stuff. I'm like, yeah, whatever though. If you could skip, you know, in time, you would skip through the waiting period, then you would understand that at the end of the waiting periods there is value every time, or else we'd still be waiting in the one that didn't end in value. They all do though. Even this little crap chop at the top here, that's like absolutely terrible, right? That's probably the worst movement of the day. It led to the best move of the day. Well, it's the best move of the day because it produced the most movement within the shortest period of time without conflict. And you know why? Is it because they're going to be all wrong by the end of it? Everybody just wishes they were part of that, and it's funny to me because they're all going to be wrong. They think that that was the exciting move to be a part of. I'm like, no. This move, was it this one? It's like it wanted to be. They're related in a strange way. And if they're related, what about, like, you know, that? Is it suspiciously particular that, you know, we can kind of fit the low on there and it kind of suits it? Doesn't have to act the same way, but it certainly fits within the confines of the last thing that it did when it was similar to the thing that it's doing. Like, it's similar to that time. And now I bring it over and we can see the similarities. Look at how much space we've got before the actual trend. Like, if this trend breaks, are we not still in a downtrend? It's like, does this trend have to break to get to the next trend? Oh yeah, it does. So we know it's going to be part of getting to the next trend. This is for people that are late. This is for people that didn't hold yesterday. Unfortunately, the trade does blend into today, and I did say that it would. You know, there's no better way to do it than to have still been working from yesterday. You know, allow the pullbacks in the range and continue to hold. But, you know, I'm not telling you what to do. I'm just showing you the door. It's your job to walk through it. I'm not clicking the buttons for you. You can start to see the value in holding. The agenda, as I call it. Anybody that thought that the red zone was going to lead to the freaking green zone had another thing coming as well. We didn't talk about that because it wasn't on the agenda. But the red zone is designed to lead to the green zone, and it didn't. So anybody that wanted the last most favorable thing to work for them, the thing that happened overnight, look at that. It's supposed to use the range, right? Well, try that crap today, you don't get it. It's funny. And how many people do you think tried to latch on to the most successful thing yesterday? And look at how that's working for them. It's not working for them. They were part of a trap, a trick. But the next trend is the trend until we break it. And when we break it, we will not be in this downtrend anymore. It will be in an uptrend. We could draw that uptrend in and understand that that will be the trend until we break it. So now, the fact that we've went from a 61, let's talk about the next 61. I gotta put music on again. But let's see. The next 61 is ironically that node right there. I'm like, what are the odds we don't get involved with that? Well, we're probably getting involved with that. At the 75% chance. And I don't care if it makes it a little tough to get there, but this looks like an inverse head and shoulders that worked. Actually, I mentioned that before too. A head and shoulders, and then having an inverse head and shoulders that actually reverses it, and it chose to do that. Which is interesting to me, because like, what about this move here? Can we like do that move? Oh my goodness. That reminds me of when I put a bar in here and we have the same kind of movement coming out of one side that we do the other. And I mean, that is one way for us to make this pattern, which is so easy and simple. I mean, we did it 3 times on the way up here. You can really see a lot of what's going on. There's not a single thing that can't be understood about the way it's moving. Like, the institutions are responsible for all of this movement as far as I can see. Because the people would obstruct it from happening. They trade randomly, and they make it difficult for the institutions to execute technical analysis properly, because half the people don't like believe in it. Like, it's something that you can or can't believe in. I'm like, if I write down 2 + 2 = 4 and somebody's like, I don't believe it, I'm like, I ain't got time for that. And this is a 5-wave move as well that is 1, 2, 3, 4, 5, and it's not working well. It is treating people like absolute crap. And this is where we're at the 50. Like, if you think about the pinnacle of the worst price that anyone could buy at, it's here, or sell at. Short or buy, anybody that makes a trade from this point has been punished, other side, punish, smack. And then they come back, smack, big smack, and then big smack from the other side. Nothing they can do to avoid being a 0 by the end of it, because that's what they accept. If they hold from here, they've seen 0 more times than any other spot. And you want to know what's funny? Is that's where most of the people like to trade. They like this experience of being losers, it would seem, all the time. There's a one way to do it, and it's the right way, and if you're not doing it that way, then I got no time for it. And that's the way everyone should be. It's the way I teach, so, I mean, it's that clear. There's no room for opinions, because there's only one right way, and either you see it or you don't. That's the math of it. That's math, right? There's one right way to do it. It is very much like a paddle pattern here, and the people of this 5-wave move have been squeezed, like they're chopped out. They're all wishing it comes down, and I'm like, do we let them off? We don't honestly have to. That's the beauty of it. If we forget to make a right shoulder, it could be very powerful. At the end of it all, we get through the red zone above. And the easiest way to go through today is just to continue holding. So what's the odds that when we come up to a 61, having squeezed people out of a 5-wave move, that the squeeze ends at the 61? I'm like, something tells me those 61 people are in trouble. Change will happen before the time here. Like, change will happen. So if it's sooner, so be it. It's not for the best traders in the world. This area is a trap, and it's to screw people. Be careful. That's the whole point. So, and I don't care if it makes them, enticed by sharp, fast moves in this area. It's giving people the wrong idea. Like half the population's short in the thing when they should be long. We're like, how do we get them to put their stops in the red zone? Because that's where we don't want to have to buy. It's like, wouldn't it be great if we could convince 10,000 short traders to put their buy stop in that level right there? If we got to it, just, oh yeah, nonchalantly getting up there, boom, and then all of them get stopped out. And when they short, they exit with buy orders. So if we get 10,000 people to put their stops at the top, well, then we may not have to pay for it to break the red zone. So we'll continue with the agenda if they're not going to obstruct us. That's the kind of environment we're in. Can the institutions get away with breaking through the red zone? That's the most important thing to them. If you get excited about the yellow line breaking below us, no, it's the wrong thing. Sorry. But this one is the red zone. Everything's about the red zone. See, like that level up there, it's working in conjunction with the 61. We get on top of that level though, I mean, then it's going to be squeezing a ton of people. And everybody that wanted the downwards move to stick, I mean, it's only for the people that saw it. Anybody that chased it is now erased. So I'm like, oh, interesting. They didn't have any time for anybody that didn't see it coming. Again, I'm like, okay then, interesting. Either you saw it coming and you were in from before the big move, but anybody that waited for confirmation and saw the move happen and needed to be in for it because it mentally stimulated them, they were late. And the market just came back and attacked them. Now this is painful. Everybody's getting absolutely smashed. This is the reality of what it is to hold. You get to see all of these patterns fail in the name of the long trade. Now, why did that dump happen? Was it to scare people out? Because guess what? What they thought was exciting didn't matter. But I could tell you that before it happened. That's why I wasn't too worried about it coming back to the red zone. If you allowed it to come back to the red zone, it just came back to the red zone. I was like, it was the red zone of the red zone, for crying out loud. If I touch it, I lose. I know that. If I sit there and stare at it, I'll just keep selling more. The purple line's going to come back down to the red zone though, from what I can see. We're definitely seeing that red zone again. We can come back to the red zone multiple times. I'm just like, well, any hedges that are taken above the red zone, when it hits the red zone, if it becomes a loss again, you're doing it wrong. You must make sure that you're profitable by the time it hits the red zone. At the end of the day, the number one way to be is long, and if you are long, then you're doing it right. And the market just keeps providing more and more for people that follow the rules, but anybody that's not is having a tough time. This is the exposure beyond this point could be very lucrative. I don't care what kind of crap they dish out on top of this level. I mean, if you're in from below that level, what does it matter that they do on top? It's not for you. So don't get too upset about it, right? At the end of the day, it's not for you. It's for the people that literally don't see value in the best price. If you're hedging it, it's different. If you're hedging it, you're keeping exposure to the upside while you're trying to make little bits of money along the way. And at the end of the day, if you keep your hedge trade within half the size of your core, then you're good to go.